In today's fast-paced financial world, a surge in semiconductor stocks and a historic moment for the Dow have captured headlines. We'll also explore a major airline acquisition that's shaking up the travel industry. Here are today's top 10 stories you need to know. On July 6th, oil prices dipped as OPEC Plus announced plans to further increase output targets starting in August. This decision aims to ease inflationary pressures that have been weighing on global economies. The increase in output comes at a time when prices were already under scrutiny, with concerns about rising living costs for consumers. Lower oil prices can provide significant relief for households, as they often lead to reduced transportation and heating costs. However, the implications extend into industrial sectors that rely heavily on oil as an input cost. Analysts indicate that if crude oil prices break below key support levels, it could signal a bearish trend for energy stocks. The news has sparked discussions regarding the future trajectory of oil markets, especially in light of fluctuating demand and geopolitical tensions. Investors are closely monitoring how these changes will affect inflation, consumer spending, and overall economic activity. As the markets react, the industry will need to navigate the balance of supply and demand in a challenging global landscape. As July unfolds, strategists are sounding alarms about the momentum trade in the stock market, suggesting it may face significant volatility. Historically, momentum trades struggle during this month, which raises concerns among investors. The S&P 500 has performed well year-to-date, and small-cap stocks have shown strength. However, the underlying market dynamics appear fragile due to uncertainty surrounding inflation and AI valuations. Analysts are warning that if high-beta stocks begin to reverse, it could lead to a violent unwind of current market trends. This potential shift could impact investor sentiment and create ripples across various sectors that have thrived in the recent bullish environment. The cautious outlook suggests investors should remain vigilant and prepared for possible corrections. With many economic indicators shifting, the ability to adapt to changing market conditions will be crucial for maintaining momentum. As we navigate through July, the focus will be on how these trends evolve and what they mean for the broader market. On July 6th, Indian markets continued their upward momentum, with the Sensex gaining 521 points to close at 78,285, while the Nifty rose 160 points, exceeding 24,400 for the fourth consecutive session. The strong performance was largely driven by HDFC Bank, which emerged as the leading gainer in the Nifty index after posting positive Q1 updates. This bullish trend highlights a sector rotation, with realty and auto sectors emerging as winners, while technology stocks faced a pullback. The consistent gains reflect a robust investor sentiment and confidence in the domestic economy. Analysts are optimistic about the outlook, emphasizing the importance of maintaining this momentum as the market approaches critical resistance levels. Market participants are particularly interested in the performance of key stocks and sectors that have the potential to sustain growth in the coming weeks. As the Indian economy continues to show resilience, the focus will be on how these trends impact future market strategies. C3.ai, a prominent artificial intelligence software company, experienced a staggering 23% stock surge following its recent earnings report, which exceeded market expectations. CEO Thomas Siebel highlighted a significant change in market perception regarding AI solutions, fueling investor enthusiasm. This dramatic increase underscores the resilience of companies focused on AI, even amidst broader market concerns over valuation bubbles. The volume-driven breakout in C3.ai's stock indicates a robust interest from investors, suggesting a strong risk-on sentiment toward technology stocks. The positive earnings report not only reflects the company's solid performance, but also positions C3.ai favorably in a competitive landscape where innovation is paramount. As the demand for AI solutions continues to grow, the implications for the company's future are promising. This momentum could potentially attract further investments and partnerships, enhancing C3.ai's position within the tech ecosystem. Looking ahead, the market will be watching closely to see how this trend develops and what it means for the future of AI-driven companies. EasyJet shares soared by 10% on July 6th after the airline announced a preliminary agreement for a $7.3 billion takeover by private credit firm Castlelake. This significant acquisition marks a pivotal moment for EasyJet as it seeks to stabilize its balance sheet amid rising fuel costs. The takeover is indicative of a broader consolidation trend within the European aviation sector, potentially pressuring competitors to optimize their operations and costs. Investors are viewing this move as a strategic pivot that could enhance EasyJet's market position and operational efficiency. The airline industry has faced numerous challenges in recent years, and this acquisition could provide the necessary leverage for growth. As the deal progresses, market analysts will be keeping a close eye on its impact on travel-related exchange-traded funds and the overall travel sector. The forthcoming developments will be crucial in understanding how this acquisition reshapes the competitive landscape of European aviation. On July 6th, the Dow Jones Industrial Average achieved a remarkable milestone, briefly topping 53,000 for the first time in its history. Although the index dipped slightly afterward, it closed at 52,857.27, maintaining a strong position near this psychological barrier. The climb was fueled by a nearly 2% increase last week, reflecting investor optimism in the market. Analysts suggest that the Dow's performance is partly a result of weak June jobs data, which has led investors to speculate about potential Federal Reserve rate cuts. This historic achievement carries significant implications for the market, as a confirmed close above 53,000 could trigger a bullish breakout pattern. The Dow's surge reflects a broader trend of confidence in economic recovery, and market participants are eager to see if this upward trajectory can be sustained. As the economy continues to evolve, the focus will be on how interest rate policies impact market performance going forward. The Nasdaq Composite Index surged by 351.55 points, or 1.36%, closing at 26,184.22 on July 6th, driven primarily by a rebound in semiconductor stocks. Key players like Micron Technology and Western Digital saw substantial gains as the market reacted positively to recent economic data. This rebound indicates a shift back to risk-on sentiment in tech stocks following a period of volatility. The Nasdaq's performance is particularly notable as it broke through short-term resistance levels, signaling renewed investor confidence in the tech sector. The ongoing value creation shift towards AI infrastructure stocks, which have risen by an astonishing 600% over the past 4 years, continues to favor chipmakers over larger tech firms. Investors are optimistic about the future of semiconductor companies as they play a pivotal role in the development of advanced technologies. As the industry evolves, the expectation is that semiconductor stocks will remain at the forefront of market trends, influencing the overall direction of the technology sector. The release of the June jobs report revealed weaker than expected job growth, with the unemployment rate falling to 4.2%. This unexpected dip in job creation has raised concerns among economists about the overall health of the labor market. Many analysts interpret this data as bullish for the bond market, as it may prompt the Federal Reserve to reconsider its current monetary policy stance. Speculation has intensified around potential rate cuts or a pause in interest rate hikes, as weaker job figures typically signal a slowing economy. Additionally, the political landscape has become increasingly complex, with President Trump publicly criticizing the Fed and advocating for significant changes in its leadership. His remarks have introduced a layer of uncertainty to an already volatile market, drawing attention to the relationship between economic policy and political influence. The implications of these potential policy shifts could have lasting effects on stock market performance and interest rates. Investors must remain vigilant as they navigate the evolving landscape of monetary policy, especially as the Fed prepares for its next meeting in July, where critical decisions will be made. EasyJet's recent agreement for a $7.3 billion takeover by Castlelake represents a significant shift in the European aviation market. This acquisition is not just a milestone for EasyJet. It underscores a growing trend of consolidation in the travel sector, driven by economic pressures and operational challenges. EasyJet has faced increasing fuel costs and evolving consumer preferences, making this deal a strategic maneuver to bolster its market position. The airline's stock surged by 10% following the announcement, indicating strong investor confidence in its future stability. Analysts suggest that this acquisition may trigger a wave of similar mergers and acquisitions within the industry, compelling competitors to reassess their business models and strategies. The implications extend beyond EasyJet, potentially affecting travel-related exchange-traded funds and altering the competitive landscape among European airlines. Enhanced operational efficiency is anticipated as EasyJet integrates Castle Lake's resources, equipping it to better navigate ongoing challenges in the aviation sector. As the deal unfolds, stakeholders will monitor its impact on airline profitability and consumer choices. Looking ahead, the evolution of the European aviation market will be critical as it adapts to new dynamics, with consolidation likely shaping the future of air travel in the region. The Nasdaq Composite Index reached new heights on July 6th, closing up by 351.55 points, or 1.36%, driven primarily by a notable rebound in semiconductor stocks, such as Micron Technology and Western Digital. This surge comes in the wake of positive economic data, including stronger-than-expected job growth and consumer spending, which has reignited investor interest in technology shares. The strong performance of these chip makers is indicative of a broader shift back into risk-on sentiment among investors who had previously been cautious amid market volatility and rising interest rates. As the Nasdaq decisively broke through short-term resistance levels, many analysts are optimistic about the tech sector's trajectory in the coming months. The ongoing trend of value creation is heavily favoring AI infrastructure stocks, which have seen a staggering increase of 600% over the past 4 years, placing semiconductor companies in a prime position for future growth. This shift highlights the critical role that chip makers play in the development of advanced technologies, such as artificial intelligence and cloud computing, which are increasingly integral to various sectors of the economy. Investors are closely monitoring how this trend will shape the tech landscape as semiconductor stocks continue to gain prominence. With demand for chips expected to rise, companies like Micron and Western Digital are well-positioned for sustained innovation and investment in the future. Thank you for tuning in to our news roundup. Which story caught your attention the most? Don't forget to like and subscribe for more updates.